All right, what's going on, everybody? TGIF, huh? We made it. So we had a couple requests, topic requests this week. One was for the trades that I like, the setups that I take. It was asked from a perspective of intraday, but really it's a lot of the ones that I do on the intraday, I also do from a swing trade point of view. The other one is a topic request about trading options and why it seems like it's such a hard thing to do, and why people struggle, and maybe some tips and tricks on getting out of that struggle. So with that in mind, let's jump on the option question first, because believe it or not, it's actually the easier one of the two. My trades are mine, so there's not a lot of material out there for the way I do things because I made them. But for options, that's a lot easier because it's all over the place, right? So when it comes to trading options, start with the idea that you can trade options like you trade shares of stock. Think about that for a moment. When you trade stock, you have a directional bias. You think we're going to go up, you think we're going to go down. So you can just buy a call or buy a put and treat it as if it was a stock trade. And your only focus at that point is, did I pick the right direction? If you lose that trade, it's not because you did something wrong in the options. You just went the wrong way. You should have went short when you went long. You should have went long when you went short. That isn't an options problem. That's a direction problem. You'd want to go back to technical analysis and try to figure out which direction the market is going so that you can better figure out if you should go long or short. Makes sense, right? That one's easy enough. If you doubt the option that you're picking is the right option for your directional trade, then keep this in mind. Options can be complicated. The one that you trade can make you lose, right? If I wanted to go long and I buy some way out of the money option that's going to expire today and the market goes up, I very likely am still going to lose. Well, what happened? I bought a call, the market went up. Why did I lose? It was way out of the money and it expired today. That's why it lost. So, to solve that problem, trade options that have more time and trade options that are closer to the money. Delta means many things. It really does. But one of the things that it means is how many shares of stock does it represent? There's this confusing idea out there that options represent 100 shares of stock, and that's just completely false. It's not true at all. They only represent 100 shares of stock at expiration, and we're not trading them at expiration. We're trading them now with whatever time they have left. So if we look at the delta, this far out of the money option is representing 2 shares of SPY. Well, how much money do you think I'm going to make if I have 2 shares of SPY and SPY goes up 50 cents? I'm not going to make very much money, right? Neither will your option. So, of course, what happens? We hang on to it longer, hoping it's going to make us more money because we don't like the 5 cents that it shows we made. And then it inevitably turns back around, gives up our gains. We end up in a loss. And this is an example of a 3 penny option. But you know how it goes. People aren't trading this, they're trading something that's very illiquid, something that's very expensive. And so they're paying hundreds of dollars for something, and it's going to hurt because it was still out of the money with very little life left to it. And even though the market went in the direction they expected it to go, their option didn't make them any money. So, to solve that problem, if you are getting direction right and yet you are still losing, get at the money or even in the money. Now, I know you probably don't like those costs. I don't like those costs either. But equate the same thing to a lottery ticket or just some sleazy salesman who calls you on the phone and says, "How would you like to put $2 against $1 million? If you're right, I'll give you $1 million. And if you're wrong, you just lose $2." It sounds great, right? But your chance of winning in a situation like that is what? One in a billion? You're not going to win. So you're going to lose $2 and yet you'll say, "Oh, so what? It was only $2." That is a scratch lottery ticket at the gas station. They don't work, right? Maybe you win $15 on your $2 ticket or you win $20 on your $2 ticket. Yes, they do because it sounds so good, right? And the risk is so small. It's $2. Who cares? It adds up to them, right? And for us, we don't care. It's $2. We move on with our lives. Well, that's options. And if you're trading some very cheap, far out of the money piece of trash, you can expect the absolute same results. Trash. So get in the money, at least get close to the money and put more time on it. It doesn't matter if it's a day trade, trade a 7-day option, trade a 14-day option. You can still close it today. It's okay. It will make a comparable amount of money if you buy the at the money 127 with 14 days of expiration or a 127 0 day. If we was to go up $1, those options would make a comparable amount of profit, right? So give yourself more time. Trade at the money. So you got to evaluate when you say, "I'm putting on these options trades and I just keep losing." One, were they all the same kind of options trades? Were every one of those a directional trade where you thought the market was going to go up? So you bought calls, you thought the market was going to go down, you bought puts, or were they something different? Because in options, we don't just have to trade direction, we can trade non direction. So we think the market's just going to go sideways and not go anywhere, or that the market's going to go to a very specific spot, which is like a bullseye. If you're trading those trades, then it becomes even more unique on the kind of strikes you have to choose, how much time you have to give it. And or are you doing things like premium trades where you sell to open and you buy to close, and you're doing it with the it's what a lot of people try to use it for, like a fixed income trade where they just run around selling premium all the time. There's nuanced specific rules you got to use when you're doing that sort of thing so that you get an appropriate amount of credit for the risk you're taking. So evaluate, why are my trades losing? Am I going the wrong direction? Am I choosing the wrong expiration? Am I choosing the wrong strikes? And where did the trades come from? There was a chat the other day where somebody was using Trady Ticks here in the Discord. And don't get me wrong, it's great to have those things here in the Discord. But if you don't know what those things are and then you try to follow them, it's not going to work out very well. So Trady Ticks is a website. They have a lot of information on that website that explains every one of these channels. And then they have YouTube videos that explain these different channels. So if we go in there and we take a look around, we can find things like the scalper bot, the bullseye, which is really popular. And in here, it's going to give you an option recommendation. It's kind of nice because it gives you the probabilities, so the confidence on whether or not the trade will work. It tells you whether to buy it or sell it, and it tells you exactly what strike to pick. I've seen people mess this up in a lot of ways. For an example, if they look at this and they say, well, I don't like the 14.5 strike, it's a little expensive, I'm going to go ahead and trade the 18 strike. So now they're using something that's going to expire in a week, but they went another $4 out of the money and they're trying to trade this trade's call out. Nope, that won't work. This is a UOA call out. It's an unusual options activity based solely on the volume that came in on that particular strike. If you're not trading this strike, it's likely that your trade isn't going to work. Then if you are trading this, it's not giving you an exit, it's just giving you a time frame for the trade to pan out. Well, what's this part all about? Is it about price action? Not necessarily. It's more about the price of that option and whether that option's price is going to go up or down and by how much money. And you want to have exits in place. For me, I like to do things in percentage forms. And if they're really cheap, I like to have a lot of them, right? And by a lot, I mean, multiples. So if it's a $3 option, shoot, give me 10, 20, 30 of them. It's fine. If they're $300 options, okay, maybe two or three or four is fine, right? But I want more than one so I can scale out. And if they're really expensive where I can't get more than one, a lot of times I'll pass on it just because I can't get more than one. Or I'll do a little of the fun stuff and turn it into like a vertical or something else because I know options and I can take this and turn it into something. But if you don't know options and you can't turn this into something else, you really need to trade what it's telling you to trade. Don't change it just because you don't like the price. If you don't like the price, skip that trade and wait for something else to come in. Also, if you're trading these, do a little due diligence. Go look at the chart. If this says buy a call, it says it thinks the market's going to go up, that price of that stock is going to rise over the next 2 days to make this call worth money. There's some problem with that logic. Calls are options in general will get expensive. And if you're the last one to notice that a stock is going up and then you try to buy it after it's already been running, you're going to pay more for it than everybody else. So if the stock breaks out and it's moving and it's going up, and now you try to buy calls and then it stalls and falls, in that little bit of fall right there, it would have lost more money than it lost from the previous day in this later part of the day, right? Something like that. It might not seem like that's the case, or you may not understand the mechanics behind that. But if everybody is buying a call, the price of the calls go up a lot more than what they should be. Kind of like buying Pepsi at the baseball game where you pay $7 for it. versus getting the Pepsi at Sam's and you pay 15 to 20 cents for it. It's still the same soda. Nothing changed except for, the supply demand issue. So with those options, if you're trying to come in and trade an alert in that channel and it's something like buy a call or buy a put, and you go in and you find that it's on a stock where it's already made an exaggerated fall. We'll use these in an example of puts. If it was halfway through the day and Palantir had already fallen this much and they're saying you should buy puts, if they're wrong, those puts are really going to lose. I don't mind losing. Losing is a part of trading. It's fine, but I want to reduce my losses as much as possible whenever I can. So I don't like to buy puts after the market has already been falling. I'd rather buy calls here at this point. And not because I think the market's going to go up, but because from a risk reward standpoint, calls are just a better trade. And if I don't have the confidence to buy the calls here, then I just don't have a trade here because I still don't want the puts. So do a little DD on those trades if you're getting them from that channel. The idea is that they're not going to know in advance to go long or short, right? None of us can anticipate that we should buy calls today because stock's going to explode tomorrow and go higher. So they will always be behind. Price will already be moving in up or down situation before they put a call in. That's just the way it is. But they're telling you to get a specific strike with a specific expiration, and you want to trade exactly what they tell you to trade, unless you know what you're doing, in which case, ignore me and just use this for your DD and trade whatever you want. This MU call, for an example. Yeah, daily double. What was the who took what's his name on Wheel of Fortune? Who took his job? Oh, I used to know the story, right? The Bob Barker left and he was replaced by somebody because it turned out old Bob Barker was a perv and was harassing the ladies that work on the show, and they finally replaced him. I know, right? Daytime drama. Yeah. The MU's in there for a long call out, and it just came in, very likely on just this little bit of price action. So it's not like it had already ran and was at the high of day and then they're putting in a call. They're at least trying to give you a call alert after it had a pullback and trying to stabilize on a round number. So just do a little bit of due diligence, evaluate what it's telling you, and if it doesn't meet your qualifications, if it's too expensive, if it's, too close to expiration, whatever it is, just pass on it. Don't pick and choose a strike that you think is a better buy or unless you already know what you're doing with options, and then of course you do whatever you want. Options trades, a lot of times I see people screw these up simply by expecting more out of the trade than the trade is worth, right? And so if you're trading options, there's a really good rule of thumb. If you're getting the direction right and you're still losing, reduce your profit target. I like to go for, like 50% of the cost of the option, but that's just a generic number. Start with something really simple, like 15 to 20%. So you spend $1 on an option, it goes up to $1.20, sell it. You made 20% profit. Now you do that and you will win frequently, but you're not really making all that much money, right? Because you're closing them really fast. But it adjusts your metrics because you have two metrics to work with. You've got your win rate, and then you've got how much money you're risking and losing. These are two entirely different things that we have to focus on. If you're new to trading and you don't know which one of these are causing you issues, just focus on one issue at a time. Say, win rate. You can increase your win rate by closing the trade quickly. I mean, I know that might sound like Captain Obvious stuff, but you would be surprised how often that slips past new traders. Close it at 15%, 20%. If you do that for a week, 2 weeks, you will find that you have a really high win rate and that you're really not making much money. If that's the case, you are winning and you're not making much money. Now increase your close target. Instead of 15 to 20, go with 25 to 30 or 35 to 40. And every other week, just keep bumping it up. What you'll find is you'll hit a ceiling at some point, whatever your ceiling is. Maybe you top out at 55, 65, 70%. But at some point, you'll top out and you'll start losing more often. Now you know you've gone too far and you want to back it up, dial it down a little bit. And unfortunately, this is a number that is not set in stone. If we're in a good bullish market environment for months and months and months, you'll have a better rate. If we're in a choppy, violent market that keeps changing its mind and very uncertain market backdrop, then you're going to lose more often. So the number isn't going to be a perfect number, but you'll get used to your sweet spot. And now you will have solved one of the problems, where to take profit. And it's not a perfect science. I wish it was, but it's not. I've taken really good trades and I've closed them out at barely break even, simply because time went by and it wasn't making any money, or after I got in, some news hit and made me reevaluate whether I still wanted the trade or not. So I just got out. Got to take everything into consideration and keep asking, do I still want this trade? I know my price target said 15 to 20, but do I still want this? I don't like that headline. I don't like what I just heard, what I just learned. I think I'm going to just go ahead and get out. It may be better to get out depending on how much money you spent on the option. So once you got win rate under control, realizing that you're in control of the win rate just by how quickly you close the trade. So that's no longer a problem. Then you can start focusing on the risk and reward, because you really don't want to spend $1,000 to buy an option and then close it after you made $20. That's really bad. Sooner or later, you're going to get hit with a loss, and it won't be the full 1,000 probably, but it'll be a lot more than that $20 you've been closing in profit. And it just becomes an entirely different thing that you want to work on. So if you are losing more often than you win when it comes to options, evaluate what you are doing and how you are doing it. What are you trading? I like to trade quality stuff, which is kind of a joke in the current market environment, but still, I'm picky. If it is trash, no matter how good the stock looks, I just won't trade it because it's trash. I don't care. I don't want to get into something that I can't get out of, or something that's just way too expensive and it's not worth the juice, so to speak. So we're just going to find something that's moving around here, maybe pick something that's junk and see what junk looks like. APT. I don't know what that is, but that sure looks like trash. So we'll go in and see. Yeah, that's some good junk right there. So APT, it's on my scan. Maybe the chart looks bullish. It doesn't, but whatever. Maybe it looks really good bearish, and I want to trade this short. Go in and look, and the options are just trash. It's just junk. It doesn't matter how good the trade looked on paper or how good the price action looked in the charts. If the options are trash, just leave it alone. So an example of what trash looks like starts with an example of what really good options look like. It doesn't get better than SPY. So if you want to know what really good options look like, just look at SPY. That is your gold standard for what good options look like. Lots of volume, a tight bid-ask spread, lots of strikes. This is a $600 stock with $1 wide strikes. That's awesome. And it's penny wide increments. It is the best of the best. Can't get any better. And from there, anything else you look at will be less than this. The QQQ is very liquid, highly traded. It's great. It's not SPY, so it's not as good, but it meets all of those qualifications. This is a really good one to trade. You start getting into something like Apple. I mean, come on, it's Apple. This should be good, right? It's okay, and that's the sad fact. It's not great. It's okay. And if Apple's only okay, what do you think that no name Joe Schmo drone company is options look like? Or some trash company that had the headlines this morning, what do you think their options look like? They're probably really, really bad. And don't think that the options must be good just because they showed up in that scanner. Because this thing isn't picky. I am. This isn't. CrowdStrike popped up in there. 470 strike puts on Crowd. That's a good one. Let's go jump in that. So would we want to trade this? Well, it does have weeklies. That's a bonus. It's at least a good starting point. If we look at the open interest, there's more positioning on the call side by institutions than there are on the put side, at least with the strikes that we can see. There's only one spot on the puts. It's right here. And yet we've got 4 strikes on the call side within these 10 that we can see. So institutions are more over here than they are over here. And that makes sense because this was going up, and now we just seen a put call out in here going the other way. So let me bring that up. It was 6-6. What? That's today, which is funny. They say they expect it to pan out in 1 to 2 days. It is today's option. So whatever. 470. And they say buy a put. Look how wide the bid ask spread is here, 70 cents. So if we split the mid, we can land at around $1.60. What's this mean? Just on the face of it, what does that mean? If I held it to expiration, this stock would need to be at $471.60 for me to at least make 1 penny in profit after the money I spent to buy it. Because you take the 470 and add $1.60 to it, that's your break even at expiration, which isn't that bad. It's only $1.70. But what about those stocks that are like $750 for the option? Well, then instead of getting a 470, I would have needed 477 plus whatever, right? So now we've at least got a starting point. Can this stock get to 470 and 60 cents by the end of the day? It's 2:30, and we're at 469. So we're basically just talking about a $1 move in CrowdStrike by the end of the day. Can we do it? I mean, sure, we could do that, right? We've got a little bear flag forming here. Textbook. It's kind of cute, really. We could totally do that. And then, of course, are you willing to risk $1.60? You don't need to risk the full 160. You could decide to just close it at half that loss, maybe even in a third of that loss. But if we did buy it, what would we do for target profit? It is 160. That's what we spent. And if we were going to close that at 50% profit, then we would need to get at least, let's see, 80 cents, right? Because 80 and 80 is $1.60. Wow, that's 80 cents. So 6 and 8, we would need $2.40. That would be looking for 50% profit. Of course, you can just get the calculator out, it'd be a lot faster, right? I've got notes and notepads and pen and pencil all around me for this sort of stuff, but get the calculator out, you can do the same thing. You just take whatever you spent and then plus say 15 and percent, which happens to be 24 cents, I would need $1.84 to close that with 15% profit. That fast, that easy. Now, depending on your broker, it'll ask you what percentage you want to close it. That's what Tasty does. I really appreciate that with Tasty, that it asks me, hey, do you want to close this with a specific percent profit rather than a dollar value profit? I like that. So be picky about the options that you are about to trade, and don't let the FOMO of the stock moving get you focused on a poor options market. If the options are trash, let it go. I get it. It's hard to walk away, especially stock trades that look really, really good. Do you know how bad it is when SPY is bad? We were having this conversation a while back. I wanted to go long and was in here and we were looking for long options to trade in SPY and they were trash. All of them. And me and Jeremy were talking about it in the live stream, talking about this sucks because we wanted to go long in SPY and none of the options were any good. So we just didn't take the trade. Actually, we went to futures, but that's beside the point. If the options aren't decent and you try to trade them anyways, your chances of losing go up a lot. So you have to decide if you're willing to take that risk or not. For me, I'm not. Trading is hard enough without handicapping our position by trading junk. So hopefully that covers a bit of the options trade question. But also keep in mind, there are so many ways that we can trade options, right? We can do the box trade, which is basically just buying calls and buying puts, and or buying call verticals and buying put verticals. We can be premium traders, earnings traders. We can trade sideways markets, bullseye markets. There's so many things that we can do. So evaluate what you're doing and consider other ways of doing it. Do you want to run, speculation, income trades, protection trades? Are you looking to use options to build out a portfolio of stock? There's just so many types, right? You got discretionary trading, systematic trading, quantitative trading, fundamentals, technicals, algorithmic, arbitrage, basis, carry, contrarian. You see what I mean? The list just goes on and on and on and on and on and on. There's just so many types of trades. And I'm not pointing this out to overwhelm anybody, just pointing out that if what you're doing isn't working, pick another one. Pick something else to do because there's a lot of things to pick from. All right. If that didn't cover it, ask specific questions and I will get more into the weeds to try to help solve whatever the options problem is that you're having because it's important that we solve the problem, right? And I'm more than willing to help you do it. So if you have questions about what I went through, or if I missed something, or if I didn't solve the problem, just ask in the chat or use your mic. I mean, that's why I do the live stream on the Discord so that you guys can talk. I like it. I have a list of trades that I do choose from when it comes to what kind of day trades I want to do. And most of these I am willing to trade with stocks, options, futures, and I'm willing to do them in day trade, swing trades. So I do consider myself a pivot point trader, and the pivot might change, but the approach really doesn't, right? It's the same if it's SPY, the ES, the QQQ, it doesn't matter, right? The pivot can be a floor pivot, yesterday's high, yesterday's low, Globex high, today's open. Uh, I can look left and just see the last place price turned around and call that a pivot, right? It really doesn't matter what the pivot is. Anything can be a pivot. If you ever went and got into basketball in any way and they would talk about pivoting on your foot, well, all you did is just changed direction. Anywhere price has changed direction, it left behind a pivot. So, we can call anything a pivot. We start to get more specific about which pivots and whether or not some are more valuable than others or some have a higher follow through than others. Yeah, maybe to a point, but it's more of a time frame issue than anything else. The idea being that a daily high or low may provide a really great pivot, but a 15-minute high or low may not be such a great pivot, right? And yet, say an intraday five might be an awesome pivot if it was the first 5 minutes five. Here is a blog post that I wrote a while back. Is this isn't new, and it goes into a little bit of detail about the intraday approach that I like to take. And this is not a comprehensive list, but a pretty good list. I didn't want that. I wanted the image, sucker. Copy image. Nope, it's not going to do it. Fine. That is the image right there. Inside day breakout, inside week breakout, 5 minute open range, 5 minute measured move, 30-minute open range, uh, breakout failures, two bar reversals, gap close trades, whether it's a price gap or liquidity gap, and TRB setups. Those are my basic go to intraday trades. A lot of them are the same thing, right? The breakouts of yesterday's high or low is really not much different than the breakout of last week's high or low. And the same thing with the open range breakout. It's still a breakout trade. It doesn't matter if it's a 5 minute open or yesterday's high, it's just the same thing. The technique is the same. Now, the two bar reversals are a lot like a TRB setup. They can tie in to any of these breakout plays, especially if it's a failure to break out, which is one of my favorites. Some that are not on that list are V bottoms, double bottoms, the 1, 2, 3 fail, the VWAP walk, capitulation lows or blow off tops, and narrow range breakouts. Those are a little more specific, but same kind of thing. Now, at some point, I used to talk about institutional pivots, and I quit doing it because it really confused the heck out of people. Um, the idea of the word institutions. When I was in psychology classes, they would talk about how society is no longer really trusting the institutions around us. And that's kind of where the word institutions is being used from. It didn't mean institutional traders, right? Or hedge funds or anything like that. That's not what I meant. But that's what everybody was assuming. And that's what they were picking up on. So I quit using it. So our institutional pivots are the open, high, low, close, and floor pivots, which are based on open, high, low, close. Those are our institutional pivots. So I just really threw that word out since it was confusing people. And we just say pivots. Now, initial balance, this thing has grown over the years. It used to just be the 6 p.m. to 7 p.m. initial balance, but now it's quote whatever market open. So it can be Europe's open, Asia's open, right? The U.S. open, and it's a 1 hour open range. So you can just scratch that and call it open range, and then use it on whatever market open you want. The London Open, Asian Open, U.S. Open. The failed flag play is kind of unique to me. I really feel like I fleshed that out myself. I certainly wasn't one that I was taught, because every candle book I've ever come across wants to teach you how to trade a flag. And what I have found over the years is that flags fail a lot. And if you can begin to recognize what a flag's failure looks like, then you end up finding yourself with a potential cup and maybe a handle, and then on from there, right? Which is what we had here. We had the trend to the downside, the flag was forming, or maybe even a pennant. It's kind of the same thing, really. And then that fails. It did not go lower. Instead, it just kept going sideways. And eventually we popped. The target is trying to get back to the previous high. So failed flag play. I like that trade, right? It's one of my fun ones. So the link that I put in the chat, while that one is for the intraday, on the blog site is another one for uh, day trades. They're going to have the same names for the most part. The difference with the day trades versus the intraday trades is that you have more option choices. On the day trades, the options choices, you really don't have like calendars and that sort of stuff, because you're just using today's. So you're a little more limited. So when I was thinking about how to answer this, it's been a long time since I have gone in and been very articulate about every single trade I take. That kind of journaling, I've outgrown it. So for me to point out my trades, if I was going to go that route, I'd have to bring out my old journal, which I don't mind doing, but I was asking about relevant current trades. So, I mean, if you look in the chat, if I used this program and I took the picture, then it shows my trade entry. But if I used like TradingView's picture, it won't show my trade in the picture. So a lot of times my trade's just not there. It just shows the price action. So I went back and started grabbing a lot of these. And what you'll find are that these match the things that we were just looking at off that list. It's a TRB setup, it's a double bottom, it's a halfback, a pivot point, narrow range. It's one of those names on the list. I like them because you can see them coming. They don't sneak up on you. These trades are designed to be the kind of trading that I want to do, things that don't sneak up on me. So I'm going to kind of zoom in here and just start down at the bottom, because by age, when I was grabbing these, I started with things that were closest to us. So if I went to the top, it'd probably be like yesterday's stuff. And then I scrolled through the chat and just picked out some of these along the way, all the way back to April 25th. Well, if you look at what I measured here, that's an inside day range. And we broke out, we tagged the 1, 2, 3, 6, and we pulled back. I show this one all the time because I love trading it. You can see it coming from a mile away. Now, you can trade the halfback bounce, the halfback breakout. You can trade from the bounce back to the high, trade the breakout of the high into the 1, 2, 3, 6, because that is the target. You can trade the reversal from the 1, 2, 3, 6 going back the other direction. All of those are viable trades. And when I was talking to somebody else about this, they were under the assumption that I was trading every one of those. Absolutely not. One, I just don't trade that much. I don't want that much. I'm not trying to take 30 trades today. I want to be very specific and find the best one out of any of these potential trades to take. I like trading reversal plays, but this isn't a really good bottom or 2-bar bottom, so I didn't have that. It's not building a base down here, so I really didn't get a nice TRB setup. It's not a V bottom, so I don't like this reversal. There's no trade, even though I would have traded a reversal if there was a reversal pattern. Now, it does have this breakdown, and if we had drawn the fib, it's very likely that we had like a 111 here and a 1, 2, 3, 6, and that we hit into those and failed and came back up. But this is what I had shown in the chat at the time, so this is what I used, right? And with all of these pictures, I didn't just go back onto that day and start taking pictures. These are from the day they were taken. So this is from the, it's what we have. But that reversal, it was a 1, 2, 3, 6 or a 111. So that was playable. The bounce, well, getting to the halfway point, since the reversal was trash, the halfway point, that trade isn't there for me either. But at any other time, I'd be willing to at least consider the idea. We got to the 786, that's where we failed. And then on that failure, where we headed? It's back to the half. That's the trade. And if we can break the half, we're going back to the bottom. That's a trade. The reversal was good. I like these kind of bars where we had this big bar and it was really fast with almost no wick across the top and it closed down near the low. I like those kind of plays. And when I get them, a lot of times I'll match the half and I'll try to catch one of these wicks. That might be a bit much to kind of grasp, but I'm going to zoom in a little bit. This is fast, and I don't trade a 5-minute chart, just to be clear. I use a 5-minute chart for analysis. I have a 5-minute up at all times, but my actual trade chart is different. It's a tick chart. But when I get this kind of reversal, I will try to spot that half. And it's not like I get the drawing tool out and I measure it exactly perfectly. But if you look at the dome, a lot of times you'll have extra contracts right in that spot on the bid and the ask. So they kind of help line you up with where your entry should be at. You put your limit order in the right area and you're just trying to catch the mid. This kind of trade will lose, right? My entry is not about not losing. It's about making sure that if I do lose, it's going to be a very small amount of money because I can use 6-tick stop on a trade like this. Sometimes 4 ticks if it's later in the day, right? If it's like 10:15 or so, I might need a little bigger of a stop, 6 ticks. But anything past lunch, I can use 4 ticks on something like this. 4 ticks, 3 ticks, I will take it, right? Not necessarily because it's got that really high win rate, but because it's 3 ticks, 4 ticks. And of course, the target is back to the half. And if we can break the half, then we keep going from there. Since we didn't and it reverses, this again is not a really good reversal pattern. Those matter to me. If you don't know any reversal patterns, start learning some. The 3-bar is a really good reversal pattern. Right here, kind of. It's like a evening star reversal. I like the evening star, but you can use dojis, marbozu, um, bullish and bearish haramis are really good above the stomach. Find something and just start with it. There's probably 12 reversal candle patterns, candles, not patterns, because then you get into like head and shoulders and don't go that deep. 1-bar, 2-bar, maybe 3-bar patterns, 10 or 12 at most. So pick one. Study that, get really good at it, and then add another one. Over the years, you just add them all up and you got a whole repertoire. How's that word on a Friday? My sorry French. This is not one of those though, right? This is a really poor reversal, so not a really good setup. And this big bar here with the handle on that hammer, it really screwed up any good reversal off of that half. Now, don't get me wrong, you could have just took the half, right, for a long, especially after this wick here. So once that was set, you could have tried to go long in either of the other two candles. When I do that, it's usually where we closed. I'll try to, go long if we get above a close or if we break out. And if you notice, neither one of those look good on the other two candles, which is why I said there really wasn't a trade here for me on this time frame. And if I can't see the trade on this time frame, I'm not taking it on my trade either, on my time frame, my tick chart. So we got up to the half. We had a blow off top candle to where we had this like ramp micro wedge and then a blow off top out of that micro wedge, but it wasn't a blow off top, right? And we knew it wasn't because wedges with price in those wedges should not get into that last 20-25%. And this did. It got into like the last 8%. So we already knew that it wasn't going to be a blow off top, but it's what we call it. Um, it's what I call it, that big blowout bar after a price pattern, like a rising wedge. That got us through 100. And then we got a little mini Busby here. And we kept going right up to the 1, 2, 3, 6. I know what's supposed to happen after we get there. That red bar is an OCC. It's opposite candle color. And once that red bar closes, we can expect that the next bar, or that we can move the drawing at that point, and that the next bar would start to fill out the next pattern. So here's the midpoint of that pattern before we even got up there. And what you'll see me say in the chat a lot of times is, hey, we're going to this target. When we get there, let's look for an OCC. And then once we get the OCC, we'll update the drawings. Ask yourself about the trades that you take. Can you articulate in advance what price is supposed to do? Can you draw it out on the chart and demonstrate what price is supposed to do? And I'm not saying you got to get it perfect, right? If I had drawn this, I would not have drawn the little doji there probably, right? My drawing would have shown us just going to the 1, 2, 3, 6. But once we got there, my drawing would have shown the pullback. And I can even update my fib off of my hypothetical drawings. I've done that. It works really well. So then you can lay out the next target above that. If you're looking at your trades and they're not working, try to evaluate how much of that trade you knew before you took the trade. Because really think about it. If you can't draw it out, if you can't articulate it and tell somebody else what the trade is before you even take it, what are you trading? A guess that it's going up or down? I can flip a quarter. I don't even need to guess. Then just let the steel tell me what we got. Long heads, short heads, long tails. Just guessing. So don't guess. Draw it out. Don't even bother taking the trade if you're in paper. Don't even bother trading it. Take a picture, draw it out, write it down. Because if you go through the chat and read what I write, a lot of times I articulate right there in the chat. I used to draw them. I don't draw them as much. But I used to draw out exactly what I think price was going to do. And I would post that. Now I just use the words most of the time. You should be able to do that. So here was another one. Make sure we get the order right because sometimes I went left to right, sometimes I didn't. All right, so tight range. I'm not on the low of the day, which is very specific because that half wouldn't be the same spot if I was at the low of the day. But this is how I draw it. If I'm trying to project downward, I'll use the body, not the low, right? That's just my approach. I've got material on that if you want to understand it, but this is how I do it. So there's the midpoint. We didn't get above it, came back down, and now we just built this really tight range. And if you look at the time, which is probably hard to see in the video, it's like 11 in the morning. So we ended the morning range in this sideways tight little cluster between say 40 and 20. That's really tight. So in the next picture here, we came out of that really tight range to the downside. There's our expansion. And we can see yesterday's price action here. Now, I don't have it drawn, but we got to worry about yesterday's midpoint. And although I don't have it drawn, that was a 1, 2, 3, 6 and a 111 of the previous day. I love that trade. I wouldn't have traded it because it was too early in the day, very likely. But that would have been a good trade, right? I like those. So there's our breakdown. And now we've got the previous day's price action. All right, yesterday's high, yesterday's low. There's the 1, 2, 3, 6, the failure, the dump, consolidation, and then dump down to yesterday's half. It's the same trade I show all the time. So it's a really good trade. It doesn't always work, right? Nothing always works, but you can see these coming. They don't surprise you. They don't sneak up on you, and you know exactly how much money you can make. So you know how much you should risk. If I tell you, hey, you can make 40 points in this trade, well, how much are you willing to risk for 40 points? You got a lot more information, right? Because you know the possible amount of profit you can make. Not that you'll actually make that, right? A lot of times we get out early or we hold too long and then it bounces up and we give some back. It's not a perfect science, but we got at least a ballpark idea of, hey, where are we going? So that we have a better idea of, hey, what am I willing to risk? Yesterday's price, some news that took us to the downside. And this is not trend, by the way, if anybody is struggling with that. This is like one time framing, event driven news. This is chaos. There's nobody buying. Nobody buying, right? It's just falling. So if you jump in on this, it's like a parachute play. You just hop on, close your eyes, and hope it all works out. No amount of technical analysis works here. If you've got order flow, great. Otherwise, the recommendation, go to a smaller time frame because there's nothing here that you can trade. There's no support, no resistance. Even the pullbacks on those wicks on a smaller time frame, it may look like this, which would be awesome. But on this time frame, there's nothing here. So either go smaller or leave it alone and let it settle until it starts to show you candles that you can trade again. But that's a breakout of the previous day's range. So there's our inside day breakout that I talked about earlier. We would look for a 111 or a 1, 2, 3, 6, and if we got there, then we'd look for opposite candle color. Now this is the same day. It's just after the fall, we based a little bit, and then we got into the regular trading session that day, and we kept the lows and actually went lower. So I had this drawn from here to here, and we paused for a moment, and then we broke down from there and got into the 1, 2, 3, 6. So I updated the drawing, and that's where this picture came in. 54.59, so basically 54.60. And I'm looking to see, hey, can we get through that 786? Because if we can target the half. And if we can target the half and get through that, we can get up to high a day and then maybe start to get back from that really big, deep drop that we were in. This was the other side of that image because I had both charts open. One side was the ES, the other side was the VIX. And the VIX was giving us a little bit of a warning here. It was not breaking down and continuing to go up. The ES, these two bars are lower, but on the VIX, these two bars are basically inside of that bar, right? So like all of this is a package, and yet these two were all by themselves. They weren't inside these. So as a little bit of a heads up that the VIX was stalling out. It didn't by itself, it's not enough to trade on, but it was at least a warning like, hey, keep that in mind because we could do that. Now, if you look at the bar here, we really didn't have a good like Morningstar reversal or 3 bar play, a TRB, maybe a little TRB, but it's not a very good reversal. So by the time you realized that we were reversing in this first green bar, we had already gotten most of the way back to the half. And by the way, I had to update that drawing because I wanted the real half, right? So I'm at the real low and real high of the intraday so that we have a solid actual halfback. But a halfback trade at that point would not have been a very good trade, right? So while it's on the list, I wouldn't trade this one. We blew through it like it wasn't even there, which adds to the testament of how strong this reversal was and gives more confidence that we're going to go to the top. You could have tried maybe something in the middle, but I wouldn't recommend it, which by the way was like a midpoint for the 5 minute open range. But either way, once we got to the top and we had a breakout, now we have an opportunity to trade again, which is what I would have been focused on. Plus, now we're getting in through that lunchtime zone, right? So we got the 111 and beyond that, maybe the 1236, and we can see that what the VIX was doing. It was breaking down, confirming that reversal that we were looking at. So we got our breakout. We got to the 1236 and it didn't stop. It just kept on going. It's really strong. Then we put in a top rounded reversal. We broke over and came back. So even though these are on the list, if it doesn't have a good setup, I'm just not going to trade it. And I've had a lot of conversations with people about that. Like, well, what is good? Go back and find examples of these trades, inside day breakouts, halfbacks, reversals off the low, and pinpoint the ones that you see as tradable. Because what you see as tradable and what I see as tradable may be entirely different and not always in the way you would think. When I started trading, I could not see head and shoulders. I just couldn't. And yet I have met people who have traded for one day, point out head and shoulders like they've been doing it their whole life. It took me weeks and weeks and weeks of work to see a head and shoulders. So just because I've been doing this for years and maybe you haven't, doesn't mean that I can see something that you can't. You might see something I can't, but I know what reversal I want, and this ain't it. I know what halfbacks I want, and that one wasn't. So find examples of what you like and then try to identify the things that are in it that you liked so you can find it again and again and again and again. So here it's all the same day. Updated the drawings. We've got the 786 pullback. It did break a little lower than the open, which was fine. Ran back up and tested it, but we didn't get a higher high. We ended up getting a lower low. And then the market swapped everything around right on the new hour, right at 1 o'clock. That's headline. And it pushed us up and through the 111. So this was starting to lag and to fail. And then that headline, probably a 1 o'clock auction, took over and pushed us out. I didn't have any more pictures of that day, but if you want to go back and look at it, it was the 30th. So what you'll find when going through these is that it's the same trade over and over. The nuanced pieces that really come in is, say, the entry part of all of it. And I get it when people say, well, I don't know. I don't know when to get in. Should I have my order just resting on the dome at that level and let it pick me up? Should I wait for the candle to close and then get in? Do I let the price move an X amount and then? Guys, there's no good answer to that. And I don't have a perfect science either. I know what I like to do and I know what I try to do, but that doesn't mean I actually get it, right? Sometimes it doesn't offer me the trade, or I wasn't fast enough to put my order there, or you put the order there and it just doesn't even pick you up. It touches your tick It touches your order, but you're standing in line and they feel people in front of you, but they don't feel you. Like it happens. And what you'll find is, say this long off of the low here. If that candle had dipped down and it started to turn and you got it way down here on the run, on the fly, it worked. And it didn't matter that you didn't wait for the candle to close. If it was wrong, if this was going to run up and then fall back down, you would only know after it closed and after it stopped you out that you were wrong. The point that I'm making there is, a lot of times waiting for some mythical perfect signal isn't going to solve the problem of, dang, this trade didn't work. It lost. Maybe that sounds a bit like fatalism, but if it isn't going to work, it isn't going to work. It won't matter if you waited for that candle to close and then you got in on the next one, especially if your stop is, say, all the way down here. Anywhere you got into that next trade, anywhere you got in on all of these candles, your trade was fine. It didn't matter if you caught the low, if you waited for the candle to close, if you waited for the new one to open, if you used the wick. The long was good. And if you tried to short it, then depending on where your stop was, you didn't make it, right? Or you were stuck waiting on it for a long time. And I don't do that. Say, I'm going to use this for an example because I had someone show me this the other day. They got into a trade long. This isn't going to be a perfect example, but it'll work. They got into a trade, say right there, long for 59.90, which is all the way up here. And after holding that position all night long from 2 a.m., it finally got news at 8:30 and popped up there and got their target. They're like, ching ching, made it, baby, got my target. You will never see me posting one of those trades. I'm not going to sit in something and wait for hours for it to hit my target, especially if it's putting my trade in the red like this one would have. But even if my trade was in the green, I wouldn't have done it. I wouldn't have sat there that long in that market knowing that econ is coming at 8:30 and that I'm exposed. Take a market like this where I see someone go short on something like that wick and their target is low a day, and they hold through all of this and that didn't get there, so they hold through all of this and then bingo, baby, got my price target. Cheers. No, not me. And it doesn't mean that I'm right or they're wrong, just that I don't trade that way. I try to have a very specific reason to get in, and it doesn't necessarily have to be a price pattern, but I have a reason to get in. I have an idea where it should go. And if it doesn't continue to behave in a way that I like, I'm getting out. If you're getting out, say you're in this short and it starts to pull back, so you take profit, and then it does this, and you're thinking, oh man, shoot, I should have stayed in. Look at what I left behind. Why did I get out? Then you berate yourself. You try to figure out ways to stay in there. Don't. Make subtle adjustments to try to stay in this trade longer next time. Not Don't make big statements, small adjustments. Small adjustments would be, what if you had more than one contract so that you could take, say, half off and leave the other half on, looking for more. And if you did get out fully, once it broke that low that had set, because this is just a pullback and then a bounce and a break, once it broke the low, why didn't you get in? Get back in, I mean, that we can always get back in. So by using more contracts, by having add-in spots, by having re-entry spots, then you can trade most of this move if you want to. I'm not really interested in trading the whole move. I would take it if you give it to me, but when I'm trying to get into a trade like this, even though I know the bottom is the goal, where I think we're headed, I'm not going to get in it and hold through this entire afternoon until we finally get there. I don't want to. I'll get a nice chunk of that move, and very likely more than once. I'll get some, I'll get out, I'll get some more, I'll get out, I'll get some more, and I get out. That works for me. Find what works for you. And if you are trying to hold through the whole thing, then evaluate the multiple contract thing. It really does help. Start with two, take one off, put it back on. If it's behaving well again, like continuing the breakdown, take it off again when we near the next resistance zone, and just keep fading in and out, but stay in the whole move. Practice that on paper, and you'll be surprised at how much it helps. That's what I used to do, and then I outgrew it. So now I don't do it, but I still liked how it offered some choices rather than just getting out. For getting back in, I know it sucks, especially say you're in the short and you brought your stop too close and it took you out. And you're like, oh shoot, dang it, it took me out. You can get back in, but of course that sucks, right? Because you had this really great position. You're you had no risk at that point, and now you got to get back in and have risk on the table. But if the trade that you originally entered still looks like it's on the table, why not get back in? I mean, really, just I see a lot of talk about Chase, which is why I'm bringing that up, right? Chase is made to sound so bad, like don't chase, don't chase. But if you kick yourself out of the trade, kind of got to decide if you're going to get back in again. The same thing with the comment where I see people say, but it didn't reach my entry point, and I sat and watched it run 20 points and I never got in because it didn't reach my entry. Oh, that was the wrong one. So, for an example, if we had the low marked here and we were waiting to go long when price got back down to that low, and it didn't, right? It didn't hit the low and it ran 25 points almost. I see people say that all the time. Oh my gosh, I was going to trade this and it didn't get my target, so I couldn't get in. You could have. Now, to be fair, this didn't offer a really nice reversal pattern, so I probably wouldn't have done it either. But the the point I'm making is just because this is where you wanted to get in doesn't mean you couldn't have got in sooner once you realized you weren't going to get it. And even if you did get in, say here to go long, now let me back that up. Say you got in on that white doji bar to go long, and the next bar came down lower, so you got in here as well. Then it pops up and you get out of this one, but you're still in this one. And then it goes lower. So now you're in here and it starts to go up and you take this one off. At one point, you had two contracts on at any time, but you were able to lower your position just by dealing with this movement. And sure, you took a little bit of heat, but you added in on the lower spot and was able to get out of the higher one. I've done that when I've ended up with something like this, when I thought I was going to get something that looked like that, right? You just you make it work as long as it doesn't continue to do that kind of stuff, because then you're in bad shape. But in this scenario, this was our original target. So trying to get in here and then having to get in here and getting out here, right? And then adding another one, and you get the idea that it never reached our original threat spot. triggers is there's no perfect one to this, especially with a lot of the trades that I take, which happens to be like yesterday's high or yesterday's low or the 1, 2, 3, 6. My evaluation will start with price is headed into yesterday's high or it's headed into yesterday's low. And that's the start of the whole setup. And then my trigger would be, yep, it did reverse and it's now going down or it's now going up. And I'm going to get in and participate in that move down or in that move up. No, when I say I outgrew it, the just over time your tactics change. And I mean, I am trading with a bigger account, yeah, but I still have a small account too. I like having a small account, not micro. That's just frustrating. But having say like a $500 account, you have tactics in a small account that you forget as a big account trader, and I don't ever want to forget those small account tactics. So I do trade both. But the approach that you use over time, you'll just adapt to what becomes more comfortable and or you'll adapt to the market environment. The market since COVID is really different and it's hard to explain it to anybody who wasn't here before COVID. It's really hard to explain, but it's not the same market. And I changed with the market. So over time, you'll have a style or an approach to trading, and you'll find that you're adapting it maybe because you're going from the ES to the NASDAQ or because you're going from the indexes to commodities like gold or crude, and that the tactics are just subtle but different. Once I get a trigger, I start to look for that opportunity to trade. So we'll just zoom in here on this gold trade. Once I've laid out the marks between 0 and 100, the 786 rejection is a viable trade opportunity. All I need to see is that 786 held and that we're not going to go back to the half for me to start looking for a move back into 100, maybe 111 and 1236. But just because we got to that 786 did not immediately mean that's my trade. But I would see this situation and say, hey, I'm good for shorts. Now I need to find a short play. The 786 rejection was my setup. Now I need to get a short. And in those two bars, it was a nice little 3 bar pattern, but it was all based on this one really big pop. This doesn't offer much for a short, not for me. So it more likely would have been on the green bar or on the red one on the breakdown here. But I would be looking for a short now because price is showing me 786 held. We're not going back to the half. There's my trigger. Now, what am I going to get in? Which one of these am I going to use for my short? And I think that's where a lot of newer traders are struggling because they think it's all one piece. Like it got to the half and I should have some thing that like neon flashing light that says, okay, yep, get in right here. This is your spot. This is exactly what it looks like. And unfortunately, for me, anyways, it's not that. In this one, it's the same one that we were just looking at, or the same day, I mean, not the same market. Gold was breaking down, ES was breaking out. We made it to the half and we got stalled here. And we're trying to work around that 56.92 with 57.11 overhead. When we finally did get out of the range, we just ran up into a new range and then we were stuck up there. So in these trades, oh, and VWAP is a big deal because that sideways price right there, if we break down, we'd be breaking back down through the 5711 cog with 5692 as a price target and VWAP underneath that. It's a nice short setup, and the ticks are breaking down. So that's my short play, but we didn't go down, right? MES shows we went ahead and we broke out. Cumulative delta followed with it. The short just didn't materialize, right? We went up instead of down. But the setup was there for the short. So no play because I was looking for a short. Just didn't get it. And look at the breakout, by the way. Now, granted, I had used a very narrow range here, but that was the day's range. And that big bar blew right through everything. And the VIX broke down really strongly with it. See the discrepancy though. The VIX had broke down but came right back in. The ES was still holding its breakout. And we ended up running that day into the previous day's 1, 2, 3, 6. That's all the same day. And then we had the rejection off of that. Yep, I think I should have ran it the other way around. It started with this day, right? They're all the same day, but that was the morning. And then we got into this trading session. Yeah. So with these plays, once we get the rounded reversal or we get the reversal pattern and we've now got a target or a destination, in this scenario, we rejected the half. So the downside targets are to get to the 786 and then get down to the 100 line here. With the picture that's taken here, it's not saying that anything here has given us an entry per se. Just that, okay, I'm lined up for shorts. I now want to find a short entry. Maybe it's a candle close. Maybe we come back up again, right? That we hit, we reject. Maybe we try again and get a lower high. I'm going to be looking for something to use to get in to try to take this short because the price action and the setup told me to go short. Not that I particularly had some specific candle for the short. TRB play. This was all one picture. It's ES VIX. The VIX was at the low a day and the ES was not back at high a day, which is why there was a circle here showing some discrepancy. And the way it played out, we had a TRB in the SPX. We got back up to the high a day, continued, expanded into 100, pulled back 786. Now, everybody trades differently. And I know there's there's trades that I see when people send me something and say, "What do you think of my trade?" And it's like they got in here and they got out there, and then they got in here and here, and it's like a bunch of trades all over the place. And like, well, what were you trading? Right? It'd be like 5 trades in that little zone, and the lines for the trade are within the candles themselves, and there's like really nothing there to see. What exactly were you doing? And if the trade is 15 to 20 seconds, you're in, you're out, you really don't have a lot on that time frame, this 5 minute to work with. So find a way to evaluate your trades on a smaller time frame if that's what you're doing. If your trade is inside of one single bar and all you can see is some little line showing where you got in and out, try to open that up. Go to a 1 minute if you have to, just for pictures afterwards, right? To evaluate your trade. The more examples that you can find, the more you will learn to recognize what your trade looks like and get to the point where you can draw it out in advance. When I went back and was looking at the uh, the chat, I'm surprised now that I'm not journaling every single trade. I don't draw them out as much, and the chat has really changed in the last year or so because of that. There's just not as many examples as there used to be. The way I used to do it is I would have a trade like this, and I would have all the drawing already there showing what we expect price to do. Like we think it's going to go here and reject, and it's going to go down here, and this will be our next. It would all be drawn out, and really just don't do it very much anymore. But you should be able to do that, right? To articulate where you think it's going to go. And I kind of got into that habit because back in the day, the ITC, before everybody really knew what he was doing, he would do videos where he would point out in advance, we're going to go here, and he would draw out, yeah, we're going to go there, and the trade would unfold just like he would draw out. It was fantastic. He could do days in advance, which had me stumped, and I wanted to figure out how he did it. I'm able to get a couple of hours in advance, but he was doing days in advance. It was really, really awesome. So I really focused on that a lot. But if you read the chat, it's what I do with words instead of with the pictures, where I lay out, if we break this level, then this is the next target. And if we get to that target, we'll look for a opposite candle color. And then once we get that, we'll lay out new targets. And it's not saying just get in and hold and let's go to the next target. It's saying we're going to go down to that level, so find some shorts to play, or we're going to go up to that level, find some longs to play. I think this is one that went from right to left. It doesn't matter. I'll just jump into the middle here. This is the previous day's range, high and low. And what I'm highlighting here is the 1, 2, 3, 6 reversal from the previous day because I really like that trade. I try to play it whenever I can. But there was also one from the other side. So if we had marked out that same range, and if you were trading in the overnight hours, then there was a 111 right there on the downside that you could have played. And it did get to the 1, 2, 3, 6, and then we could have moved the drawing and had short trades. Now we're on the intraday, and it's the same thing. We had the intraday range, a pullback that didn't break 786, and then a new run up to a new 1, 2, 3, 6. But it was also yesterday's high, opposite candle color, right? Everything that we would expect it to be when it got there. And that's the 1, 2, 3, 6. So that when I zoom out and we go look at this, it's this, right? Of course, this was earlier in the day. So that if we had broke down from here, then the target would be back to half, back to VWAP. You don't have to try to figure out every single candle pattern or candle strategy out there. You can use things like CD, cumulative delta, which is what I had here. The price action is all the way down here. What I have really big is the cumulative delta. That's what's showing in the upper part of that chart. And these are all from the same day too. right? So here, same thing, cumulative delta on top, price action is way down there, and it's a part of this. This was like all three together: the dome, cumulative delta, and then cumulative delta in the price. And there was a reversal day. So we had this really nice run up this day, and we played the reversal back down. It was a really good reversal back down to like 59.50. That was the 19th, and I think we made it all the way back down. I tried to catch the notes on that one because, yeah, the 19th. We came back down to 59.50, back to the half, plus some, I think. I think we got even more than that. This sort of stuff is not what I want to trade. So to me, while we can trade every single day, I don't. If it looks like trash, I'll try to trade a different market. I'll go to oil, gold, copper. Copper is a really good market to play. I'll trade that. If I have to, I'll look at Bitcoin. But if it looks like this on everything that I look at, I'm not going to trade futures. I'll go to options because this is really good for options. I'll trade that. But I don't want it in futures. Even with this really nice 3-bar reversal right there, or evening star reversal if you like it that way, that's a really nice candle pattern, but it's a trash day. So it's a range day, not a sideways day. It turned into sideways later in the day, but for the first part, it's really nice range day that finally broke down into a sideways day and a good reversal. But I would not want to trade this trash, so I would just find something else. When you give it time, it finally comes out of that range. Now we got something to play, right? Now it's something that is interesting and I'm willing to get involved. Have the halfback from the Globex or the previous days, and I'm pretty sure that was the previous day. So once we broke the range, and look at the breakdown. That wasn't trend, right? That was an event, 2 o'clock, big drop. So very likely that's not tradable unless you were prepared in advance. Um, I don't think this was the day, but I called one of these out when we were sideways like this right before the drop and gave the heads up like one candle before the drop, but I don't think it was this one. That's May 20 if you want to scroll up in the chat to see it. But that tight pattern, when we start to do that, a lot of times I'll just measure this right here and I'll mark that half. And if we start tangling up in it, especially as we're coming into a new hour, I start looking for the breakdown. Sometimes you can catch it, sometimes not, right? So big breakdown, it finally stopped. So we got to put the lines on it, look for a 786, and then continuation if it doesn't come back up. Which, it didn't continue lower, but it didn't come back up either. And we were just kind of stalled there. And that's because we were getting late in the day. So now we had to worry about power hour and whether we were going to break down again, which we did getting into power hour. But every one of those lines up a new target, right? So if you look at the 59.32, this is the trade setup. We rejected 786, so we come back to 1. If we get under 1, we aim for the 1, 2, 3, 6. Here, we got there. We got the opposite candle color, so now we need to update the drawings and we'll get new lines to target, which is what we have here. Now we got the updated drawing, the new lower targets, a new 786. We're ready to go for the next trade. We didn't have one, but if we had continued again, then we would have update the drawings again. I decided to go this route today and lay them out this way because I thought this would be more valuable than going through like my journal showing exactly where I got in, exactly where I got out. Because like I mentioned, I don't even keep that kind of journal anymore, but I still have my old one and I can certainly bring it up. But seeing exactly where I got in doesn't help when the idea isn't that we're going to see some street sign with, you know, Google Maps that says, "Hey, that's your turn signal right there. You should take a left. You should get in, go long. You should get in, go short." When for me, it's just that was our reversal. Now we're headed down. Let's get some short trades on now because we haven't hit that downside target yet. And as long as the pattern is there to give me a long or a short, then I'll trade the long or the short. Throughout all of these, I had some gold. I think there was a copper one in here. There's NASDAQ, ES, SPX. There's some options trades in all of this. I'm going to go to the top one, which is that's an options trade too. Now I had to go back in a ways for this one, but I still wanted to show it. I don't trade on Thinkorswim like I used to, but this is back when I was. It was the failed flag play. So it's the same one that we've been talking about, but I'm doing it here with options and I'm long three. Here I drew out what I think price is going to do because that's the way we used to do it back then, right? As I said in the chat, that's how we used to do it all the time in the chat room. And then you didn't even delete the drawing, right? Leave it on there to see how accurate was I compared to what did we actually get. And then here was the end of the day. Well, getting there. I think I got one more drawing, but you get the idea. And I think this last one, yeah, there's the side by side. That on the right is what I had drawn before the trade, and here's what we actually got after the trade was done. And it's not about showing off, right? It's about showing that you can do this. Lay your drawing out in advance, and you're not going to get it right away, and you shouldn't, right? I mean, I get it wrong still even now. It's the idea that can you visualize your trade and do you have any idea what price is supposed to do this time for you? Because if you can't answer that, why are you getting in? Which is what really made me gravitate to this approach, anyways. Being able to visualize what I expect price to do. Another cool one, which I mean, I think it was cool just because I'm a little bit of a nerd. But we have these stickers and this stuff, and I drew this out. I made it, right? And it was easy for me while I was making it. I kind of had fun doing it because this is one of my favorite trades. I knew exactly how it looked as I was making all of these candles because I know what my trade looks like. Now, sure, this is just one, but it's the same trade all the time. That can be yesterday's low, a bounce on the floor pivot, value area low, right? It could be a 3 bar reversal, morning star reversal, could have been any of those. It's the same trade I always trade. VWAP bounce. So really examine what do you want and then find examples of it. Once you find them, study them. If you use indicators, I really don't, as you see in my pictures, other than like VWAP, I really don't have anything on my chart. But if you do, bring those in, study them. What did your MACD or stochastics or RSI or whatever it is, what did that tell you? Did it increase your confidence that the momentum was there or that, the momentum was decreasing? Highlight those key pieces to help you better understand what your trade is supposed to do because this helps with the stop part of the whole thing, right? A lot of times I don't let price hit my stop. I'll be watching price and it starts to do something that I think it's not supposed to do, and I close the trade. And if I was wrong, if I close it, I'm like, "Oh man, I should have stayed in. Look, it was perfect. Why did I leave?" I never do that. Just shrug, maybe laugh a little bit and just move on. Whatever. Don't I don't kick myself for getting out and then watching price do what I thought it was going to do, cuz it doesn't help anything, right? You're not solving anything by looking back and saying, "Look what I should have done. Look what I missed." So speaking of that journal, I have gone through the journal before. I don't mind going through it. To me, pictures in a journal is the best journal I've ever done. I tried the paid journals. I've tried Excel and spreadsheets, and none of it worked. And for me, journal is not where did I get in, where did I get out, how much money did I make, and how much money did I lose, what was my stop. That's not the journal. That is your broker statement. You can just download that, right? Whatever broker you have, they will let you download your entry, your exit, all that. It's a That's a trade log. If you look back at a trade log 6 months from now, it's not going to help you. But if I look at a picture of my trades from 6 months ago, I can still get something out of it, especially if I learned something new since then, a new candle pattern or a new measurement tactic. My fresh new thing that I learned, I can go back in my old trades and look at it and see with my new thing that I learned what that trade looked like. Should I have really taken it? Because I've had winning trades that were not good. They were not good at all. They just happened to have made money that time. And I've had losing trades that should have paid me really well. They should have been great. And yet I lost. So I like to use pictures for a journal. And if you're struggling to trade, this is the best thing I could recommend. When the trade is done, take a picture. Now, you can wait until the end of the day and take all the pictures and journal it that way, but I always felt like that was too much because depending on how much you trade, you might have a lot of trades to journal. And then you get overwhelmed and you miss out, and the family wonders if you're still alive and you're just stuck in the office like a mushroom. And I didn't like it. So I journaled after the trade was done. And what you're focused on in the journal is really specific to you. Are you working on your entries, your exits? Are you working on adding more as the trade unfolds? Are you trying to stay in longer, get out sooner? Whatever that particular thing is that you're working on, that's what your journal should focus on. Put notes on it. I like to use Discord for the journal. So I can take a picture, I throw it in Discord. I can write messages under the picture and really evaluate what I was trying to do. I can write out the whole story if I want. It was gap close from non-farm payrolls around 10 in the morning. We hadn't broke out, so I decided to blah blah blah, right? And just write it all down if that's what I need to do. In this picture, um, I added into the trade and then I got out of both of them after we rounded over. And in my notes, I pointed out that I really had a lack of conviction on this exit. I should have got out a lot sooner, and I didn't. I gave back profit that I didn't have to, right? I could have kept it. So that was my note at the time. And that's the idea, right? That there's something to work on to find some way to improve. So if you want to read this post, it's fine. I'll send you guys the link. But the link that I put in earlier that just says strategy introduction, that does take you to the website, and all of the blog posts are there, including this one. So you would find it anyways. Speaking of changing, I was mudding my bathroom, the drywall part, the process, when I was trading in the ES, and I was in the trade through most of the day. But that was back well before COVID, when the ES would move like 18 to 20 points between 9:30 and 4, and it would move maybe 30 points for the entire 24-hour trading cycle. Like that was our average daily range, is around 30 something points. Can you imagine? Because nowadays, our average daily range is about 150 or 180. So we'd get these sleepy, boring days where you might get in around 11 o'clock and you would be in there until 2:30 or 3 o'clock just trying to get 5 or 6 points. And so I would sit in those trades, right? Because, I mean, you won at least a couple of points and we weren't, moving all that violently. And I remember being covered in drywall mud, coming into my nice clean office, trying not to touch anything, just to wiggle my mouse enough to wake it up so that I could see the computer screen and see what price had done while I was still waiting in this boring, sleepy trade. I don't get into trades and just leave them on now like I used to. I outgrew it. I don't trade that way. But price changed too. It's not like it was. Look at the ADR right now. 85 points is the average daily range. A month ago, this was in hundreds. It was like 120 back then. Hey, you too, buddy. Have a good weekend. It's going to be pretty quiet around here. The races got washed out, so we might get the bike out. And other than that, got a long list of honeydews. I mentioned in the morning briefing, if we get to one of the ADRs early enough in the day that we could go to the other one by the end of the day. Yeah, no, that didn't work. But I also mentioned we could just keep going and end up getting a full ADR. And that's what we did get today, is the full ADR. Imagine that. So yeah, price changes. We have to change with it and just adapt. Those yesterday 111s, I put some of these in the chat yesterday. I think it was yesterday. Doesn't really matter. I put some of these in the chat. Um, the the message that we were talking about the other day was researching a setup because you have to learn to trust it. This was something that was really big with me. I have trust issues, and I don't like asking other people questions about trading or really about anything. I've found that people don't articulate things very well. So I would ask a question and they would answer me with a bunch of stuff that did not pertain to my question, right? Like, hey, how's the weather out there? Yeah, my car is great. Blah, blah, blah. Startup issues. Maybe there's something wrong with the tires. Dude, I don't care. What's the weather, right? So when it comes to trading, I'm not much for asking other people questions. So I had trust issues. Had to figure out a way to trust the patterns and the setups that I would see, and then trust myself to be able to trade them. To work on that, if I found a strategy that I liked, like a breakout of yesterday's price action, and I want to trade the reversal to come back in, which is an inside day breakout failure, how often does it happen? And if it does happen often, when? Because if it's at 2 o'clock in the morning all the time, that's not going to work. I don't want to get up to trade the European session, and I don't want to trade it in power hour either. Then it was okay, it happens frequently, but are there any actionable patterns that show up with it? Like a good 2 bar reversal, evening star reversal, 3 bar play, TRB, something. So I just started going back in the past and looking for examples of that setup. Now I didn't go back a lot because I was actually doing this one that I'm showing you. I did this with somebody else. So this is like a month and a half worth of going back. And the date is in the picture to kind of help with the idea that this might look like a lot of pictures, but it wasn't actually a lot of days. These two pictures that we're going to look at are the same day. So there's yesterday's price, the half back play, which isn't our focus, but I mean, it is there, a breakout failure early in the morning, and then finally the 1, 2, 3 and the fail and the dump. Now I can show one picture, throw that in the chat and tell you guys, this is a fantastic trade. You should play it. I love it. Are you actually going to trust me and trade that every time you see it? Probably not, right? At least I hope not. Because you don't, it's only one example, right? Like, how do you know it's going to do this next time? And how often does it happen? And what if I just made it up? And when I was trading and I was new, people were really in love with the flag pattern. Now, I mean, this chat, it was like flag chat. That's all we talked about all the time is the flag, the flag, the flag. And yet we don't get them all the time, right? So like I don't know why you guys are so in love with the darn pattern. We don't even really get them that much. And if you haven't figured out yet, they fail a lot. So I had to just go out and start finding my own patterns and trying to figure out how I could trade it if I did find it. We've got a flag pattern in that picture. I tried to draw there and it screwed up the image. We had a flag pattern right there where we were at. And it actually failed because for me, that's what flags generally do more often than not is they fail, right? There's the flag pole and there's the flag, or maybe we'd call it a pennant. I would say it's a flag. But that's a failed flag play. And it leads us back to the halfback, which is a nice trade. And then we had the little fake breakout, and then finally we got to the 1, 2, 3, 6. But it had a 111 play, which would have been a nice short, and then the big short. That was a good movie, The Big Short. And that was July of last year. So after this much happened, go into the trading day itself. And now we had the intraday with its 1, 2, 3, 6 and its failure and the play back down. And then again, same day. Nope, different day. This one goes to these down here. There's the 111 all by itself. There's a 1, 2, 3, 6 with a real beautiful V bottom. I mean, that one's different than all the others we've been looking at so far. That's a nice V bottom. 3 bar reversal, like a really nice morning star. So you got to find these examples and learn to recognize them. And then what do they look like when they fail? Because if you can avoid the stop and just get out, even better, right? One contract, two contracts, the stop isn't that bad. You start adding, 8 to 10 contracts, and then you take a 4 or 5 tick stop. Yeah, that hurts. So I got all these pictures that show things like this. This is a Globex measure with a Globex 111, and what a reversal, right? Just an inverse V perfect reversal. 3 bar, nice and 2 bar, nice and tight. Those outcomes, right? I mean, think about how often this trade fails, and it does fail. It doesn't work all the time. And sometimes you only get a little bit out of it, right? You get like this little bit, like, okay, whatever. It was a decent short. You got that much. Yeah, okay. But sometimes you get that. Now, again, I'm not trying to trade the entire run. It's not my approach. I'd rather just get some and then, get some more and get some more. I'll, I'll keep coming back and getting a bite of the apple. You do you. But I like this play. So you can use it on Globex, yesterday's price, last week's price. You can even use it on the intraday. If we get a range on the day like we have here today, you can do just one small section like that. I've even tightened it up where I've done small sections like that. There's nothing that says we can't do that, right? So you can do it anywhere you want. What I found though is if you get too tight like that, then one candle goes all the way to the middle, or one candle goes from 0 to 100, and then it just becomes a mess. In every one of these, I went back in the past and I found examples and I took pictures. I gathered up all those pictures. I put a date on them so I could study them again. Like if I learned something new and the picture that I had needed more info, the picture I had a date on it. So I knew where to find it again if I needed to. And I learned to trust all of these because I studied them. And it's not just reading the description that says, yeah, a failed flag looks like this and it's going to break down and I get in here, because that's not enough. Finding 50, 60 examples, finding where it failed so I know what those look like, and really just digging into each one of them. If you do that to your trades, it'll really help. What it won't help with, if you're doing something like this, I don't, the only thing I can tell you if you're doing this is to go to a smaller time frame. If you're trading something that looks like that, like seriously, I zoomed in for the effect part, but if your trade is anywhere in here, you're probably going to need to go to a smaller time frame because there's nothing here, right? There's no pattern, there's no setup. Maybe you can turn on the tape or, add cumulative delta, but otherwise, you have to go to a smaller time frame or you're seeing something that I'm not. And I don't have all the answers, so maybe you are seeing something that I don't. But if you're struggling and that's what you're trading, that's probably why you're struggling. You can work on trade drills, by the way, those help. Um, After we get a swing low, we're expected to have wicks on the bottom of these candles on the way back up. And if we have a swing high, then we expect to have wicks across the high side of those candles all the way down. It doesn't mean that we will. You can see here we didn't have the wicks on the bottom like I would have expected, but it's what we want to see, right? And it helps if I probably go to the right time frame too. I thought we were on a 5 minute, but you get the idea, right? That after a swing low, we expect those wicks. And if you wanted to get better at getting in off the wicks, which is possible, I'm not saying that you can bottom tick things consistently because I mean, I can do it sometimes, but I can't do it consistently. But what if you anticipate all of those wicks down here? It sounds awesome, right? Because you know how much you can reduce your stop if you can get in on these wicks. That would really help, right? The thing is, after a swing low, we expect those wicks, or after a swing high, we expect the wicks on the other side. You can practice getting in on those wicks using uh, trade drills. Trade drills are not paper trades. You do it in paper, but you don't care about the outcome, right? You're just working on a particular piece. And if that doesn't make sense, think of going to basketball camp and they tell you stand on the key at the free throw line and just throw the ball over and over and over and over and over. Hey, you may get really good at shooting from the key, right? And playing from the free throw line, but that don't mean you're any good at basketball, right? You can't dribble, ball handle, pass it to your friends. If you do a drill working on these wick entries, you don't care about the rest of the trade. Where's my stop? How far did price go? Am I going the right way? Should I have been long? Should I have been short? You don't care. All you're focused on is that was a swing high. We're going down. I'm going to try to catch wicks on my entry. You try it, try different techniques, different tactics. Maybe you don't get a wick at all. Maybe you get in too late, you miss your entry. There's so many things to learn from that. And then run it the other way. We had a swing low, now we're going up. And change the time frame so that you get more candles. I'm on a 5 minute. Maybe you could go to a 2 or a 1 or even less. Don't use something like a 15 minute where you're getting one new candle every 15 minutes because you don't care about how the trade ends up because it's not a trade, right? It's just an entry. Did you catch it? Hold it for a little bit of time just to recognize that, yep, that was the high of the wick, or yep, that was the low of the wick, right? That, yep, it was the reversal. Then you're out of that trade and you look for another one. Or the halfback plays. I know we measure the whole thing in the day's high, the day low, but when I look left, a lot of times I will measure, say, the last candle's low, and I'll have a midpoint there, and I'll be trying to get an entry off of that if we come back. And it doesn't mean that I think we're going to come back, right? This could flip over, give me the bar that I just circled, and it could run right back up and never even come down here. But once we get the reversal, especially if it's a long bar reversal, a lot of times I'll mark that midpoint. Just looking to see, especially on the NASDAQ, if we will wick back down into that zone so that I might catch a trade off that. If we don't, so what? You know, it's no biggie. But I use midpoint candles a lot. Here's another one just from today where price went to the midpoint of that bar. It's not going to be perfect, right? But it went close. And like I said, I don't, get the drawing out and try to get it dead on perfect. But after a swing low, we're headed up. I'm trying to enter on those wicks and I'm trying to get as low as possible. And a lot of times the previous bar's midpoint is the spot I end up getting in. Or if I'm wrong, it's where I get out, right? With a loss. Say I got in on this as soon as the new bar opened, or even in that blue bar. We'll just say I got in there and that candle closed, the new one opened, and price came down and it did not break the half. And so I stayed in, right? I'm not sure if this was, what you were thinking when you asked the question, but Hopefully, I got what you were aiming for. And same thing with that options question. Options are complex. If I didn't go through enough pieces, then hit me up and we'll go deeper. Somebody asked me about the risk graph, and I thought this would be good for next week for you options traders. The analysis tab here, the risk profile, and how to read it. Um, I take it for granted because I go in here right all the time, but I shouldn't, right? If you guys are interested in that, I'm thinking next Wednesday would be great. That we'll discuss, how to really use the risk graph, how to read it, how to adjust the settings, and what settings are actually here. It's got your probabilities in here on how far the market can go or how far the market's expected to go, what your profit is, your loss, your break even, and then you can play back to the future and you can adjust price, time, and volatility and see how that would affect your trade. Would it help? Would it hurt? And you can draw lines on the chart from here to show where all of that information is so that you can see on the candle chart where your break even is. Really cool stuff, right? All from this one tab, from this page. So maybe we'll get a request for some other topic between now and Wednesday, but if not, I think that's what we're going to get into Wednesday. We've got CPI on Monday. No, excuse me, on Wednesday of next week. So maybe Monday and Tuesday will be quiet. I mean, I don't, just see what we get. But unless y'all got questions, I'd say let's wrap it up and start the weekend. All right, guys. Keep in mind, you can always hit us up with questions. Any of the moderators here at the Bullish Bears, we like the requests. If you've got topics you want us to cover, if you just got questions that you want answers to, hit us up. It's why we're here and we like it. It's the goal is to get you, to the point where you're making decisions in a confident way with the outcomes that you expect. It's kind of the best. So with that, let's call it a day.